Hello everyone, this is Paul from the APNacademy, and in today's video we're going to be talking about break and retests, or what people call breakout, right? So most people are facing challenges of identifying proper breakouts and proper retests, right? So in today's video we're going to be identifying the proper rules of how you can identify correct ones and those that are false. We're together. So what are we going to be studying first? We have to first define what these breakouts are and the retests are. Some people do not tend to understand them properly, right? So we're going to be looking at what they are. Then we shall be looking at the types of market movements. Now, someone will be wondering, why am I studying market movements that I'm talking about break and retests? You need to know the type of market you're in before you can start looking out for the break and retests, right? Then we're going to be looking at the rules that you should be able to identify before you can know that this is a break and this is a proper retest, right? Because there are a lot of fake outs in the market that can always attack traders, and most traders tend to fall for those traps. And also, lastly, we're going to be looking at how do we properly trade the break and retests. As usual, if you've been watching our videos, we usually start with the theory part, and then we go onto the charts and we do it practically. So let's first kick in with the theory bit so that we understand together, so that by the time we go to the charts, you're not lost when I'm trying to illustrate to you. So stick around until you get to the practical bit. First, understand the theory and everything we're talking about. Understand the rules that you're supposed to apply on the charts. Let's not just rush the charts because we may get lost when we're there. So let's start with defining what this is, right? Let's first start with defining what the breakouts are, right? Now, let's assume the market made a push up, made this high here, then made a push down, made a low. Now, remember we said in our previous videos that the moment the market makes a turning point that is above current price, it becomes resistance. And when the market makes a turning point that is below current price, it becomes support, right? Now, when the market comes back to this level here at resistance, remember we define it as a level or an area above current price where we expect sellers to come in. Now, in a normal market situation, when the market reaches a resistance, we expect sellers to kick in, but not just like that. There are certain things you need to look out for. We have a video on how you have to understand how the candles that are approaching this level should behave like, right? For you to know that there's going to be a possibility of the price standing from there. Now, the moment the price crosses this level here, this is what we call a break. This is the break. The act of the price crossing above this level where we expect sellers to come in is what we are terming as the break, right? And then the process or the act of the market coming back, because when the market breaks a certain level, if this is the level that we're talking about here, this one here, if the market breaks this level, this is the break, we expect the market to come back to it to do what we call a retest. Now, the act or the process of the market coming back to this level here, right, is what we call the retest. Now, ask yourself, why does the market do this? The market does this to trap those people who do not understand what they're doing. The market does that to trap people there are many traders who trade breakouts. Some people are momentum traders. So the market makers do this to trap people who want to jump along the price movement, right? So usually after breaking a certain level, they have to come back to do what we call collection of liquidity. So these retests here usually are to trap traders who do not understand the act of buying low and selling high. So make sure you meet the rules that we're going to be talking about later on in the video. Let me just repeat that. A break is when the market crosses a level. This act here of the price crossing this level is what we're terming as the break, right? Now, when the market creates this new high here, we expect the market to come back, right? And we've already said, why does the market have to come back? The market has to collect liquidity to enable it to continue being pushed up, right? Without liquidity, this price will not be able to move. And how does the market, or how do the market makers get liquidity? Is by kicking out some traders, by making some traders lose money. And of course, we all know that majority of the traders do lose money. And one of the aspects where they lose money from is this one here. The moment someone sees that his or her resistance has been taken out or being broken, they rush in to start buying. And the market comes and clears all their stop losses. And that's how we get liquidity. So we are saying that this act of the market crossing over here is what we call a breakout. And this act of the market coming back to retest the area here in the process of coming to get liquidity is what we are calling a retest, right? So these two things move hand in hand. That's why we have termed it as breakout and retest. Once there's a breakout, we expect a retest in a normal market condition, right? But of course, we have also a topic which we have named Fibonacci retracement tool. We're just going to just look for it amongst our videos. You will see it there. These are the abnormal market situations whereby the market is moving in an impulsive way. So when the market breaks this level in an impulsive way, sometimes it may not have to come back to this level and stops around up here. And how do we know those levels? We use the Fibonacci retracement tool. But if you're not so familiar with the Fibonacci retracement tool, just look around one of our videos. We have a whole video about the Fibonacci retracement tool, right? So this is how we define the breakout and the retest. I hope you guys have understood. If you've not understood, just ask your question below in the comment section and I'll be able to get back to you, right? So now let's talk about the different types of markets that you need to know. This one is very common to most traders. And if you're new, we're just going to briefly talk about it, and because you need to understand this, right? Now let's start. There are three types of market movements, or there are three types that the price can move within, right? The first one is the uptrend. Now, just like the name suggests, uptrend, it means that the market is moving upwards, right? Now, how do you know that the market is moving upwards? You will know that the market is moving upwards when it is making higher highs. The market will first create a high and then creates a low. And then for us to know that now there's a possibility that the market is going to continue moving up is when the market crosses this previous high it had made, right? I hope now you can see why we're studying about breakouts, right? Break and retests. Now, when the market crosses this level here and creates a new high, this is a high, this is a low. And the market comes back to retest this level here. This is a new higher high. Why are we calling this one a higher high? We're calling it a higher high because it is higher than this previous high. Now, when the market comes to retest this, it is creating what we call a higher low. This is a low here, but why is it being called a higher low? It's being called a higher low because it is higher than this previous low down here, right? Now, one thing that you have to note is previously this was a resistance when price was down here. The moment the price crossed it, it became support, right? So this will become your new support and this will become your new resistance. Are we together? Now, again, we expect when price reaches a resistance, we expect sellers to come in. But the moment, again, price breaks it and creates a new higher high, this is what we determine that this is how we tell that the price is an uptrend. Why an uptrend? Because the market is making higher highs and higher lows. Let me just repeat that for someone who did not get it properly. Let's just repeat that one more time. We know that the market is an uptrend when it's making higher highs and higher lows. The market will first make a high, right? In this case, we still don't know if the market is making an uptrend, right? Then it makes a low. Now, this height has made yet for it to come back down. Remember, we said turning points are very, very important for us when we are trading, right? Now, when the market comes and turns from here, it makes a resistance. And when it comes and turns from here, it makes a support. Now, when this at resistance, what we expect sellers to come into the market. But the moment sellers do not come here and the price continues up and creates a new turning point up here, it means that the market has broken the resistance. And once the resistance is broken, what does it become? It becomes a support. And this new turning point here, which the market has created above, becomes your new resistance. In simple terms, once resistance is broken, it becomes support. And once support is broken, it becomes resistance, right? It just depends on where your current price is. Now, once the market creates this new turning point, it becomes a higher high. Why is it a higher high? Because it is higher than this previous high it had created before. Are we together? Now, when the market creates this newer high, it has to come back and retest this area it has broken. Just what we are going to be talking about today in depth. First, we broke, then we are coming back to retest, right? Now, when the market is coming back to retest, remember this has become your support and this is your resistance. Now, again, the market moves up. When we reach the resistance, we expect sellers to come into the market. The moment sellers fight and they fail to overpower buyers, and again, buyers do break above, and they create a new high here, which becomes a new higher high, right? Why higher high? Because it's higher than these previous highs, this one and this one. So it's a higher high, right? So This is what we term as an uptrend, when the market is making higher highs and higher lows. Why is this one a higher low? It's a higher low because it is higher than this previous low here, right? And also here, the market will come back to retest this previous higher high, making it a higher low. So if you're to define what an uptrend is a market movement where price is making higher highs and higher lows, as simple as that, right? That's the first type of market movement that price does make. Now, let's go to the second one. Now, the second one is just the opposite of the first one, which is called the downtrend. Now, in a downtrend, since I've just said it's the opposite. Now, in downtrend, the market is making lower lows and lower highs. Let's see how the market prints that out, right? The market first creates a low and creates a high, right? Now, in this situation, we do not know if the market is actually going to continue moving down. But the moment price comes and breaks this, remember this turning point below price, current price, we expect it that when the price reaches here, we expect buyers to come into the market for the price to buy. But the moment the price breaks this level here, since it was support below, at first it was support, this was your resistance, right? When price comes and breaks this support level, it becomes a resistance. And when price comes and creates a new turning point here, it becomes a lower low. Why is it a lower low? Because it is lower than this previous low here, right? It's lower than this previous low. Are we together? Now, this becomes your new resistance and this becomes your new support. Of course, we know that once the market has broken this level, we expect it to come back here. By now, you should be knowing why. We explained that when we're just starting. The market makers to come and grab liquidity, unless it is an abnormal market situation, which we have made a video about when the market is making impulsive moves, right? So when the market is making impulsive moves, it may not exactly come back to that broken level, but it may stop somewhere around one of the fib levels, right? If you do not know that, you can just watch our video on fib level. It's a very comprehensive video, right? So when the market comes back to retest here, we do expect sellers to come into the market, of course. Now, when the market again is coming back towards this previous lower low that they had made, we do expect buyers to come in the market. The moment sellers overpower buyers and again breaks below, it creates a new lower low. Now, when the market came back to retest here, it created what we call a lower high. Why is it a lower high? This is a high, but it is lower than this previous high here. Do you notice? Right? It is a high, but it is lower than this first high it created. So making it a lower high, right? Then the market again breaks below here and creates a lower low, right? Now, when the market creates a lower low, it has created a new support. Remember we said when support is broken, what does it become? It becomes a resistance, right? Now, we expect again the market to come back and retest this resistance. It repeats this same process until it changes trend, right? We have a whole video on change of trend. So in case you're new to the channel, do not forget to subscribe so that you don't miss out on all the new content that's going to be coming out, right? So this is what makes a downtrend when the market is making lower lows and lower highs. Are we together? Now let's look at the third type of market movement that the price does make, right? That type is sideways movement. Someone can call it consolidation, or someone can call it a ranging market. Now, what happens in a sideways movement or ranging market? In a sideways movement or ranging market is when the price is not moving, is not showing us higher highs, or is not making lower lows. How does that come about? It means that the market is making equal highs and the market is making equal lows. And how do these situations happen? For example, if price was coming from up and it makes this low here, it makes a low, and then goes up, makes a high, right? Now, what do we expect? When the market is to come down here, if let's say it's in a downtrend, we expect the market to break below, right? But the moment price is held here and it's bounced off and comes back here. Now, when price bounces off here, this looks like a double bottom, right? When price bounces off here, we do expect price to go to resistance, and there's a high chance that it could break above. But the moment again it fails, since this is a resistance, this is a support. At resistance, we expect sellers to come in. Now, the moment sellers overpower buyers at this point and they push the market back down, it means that this market is making, it first made a high, it made a low. So it first made a low, made a high, came back, made equal lows, right? Why equal lows? Because this low is almost at the same level. The market may not be this perfect like the way we are drawing it. Like when the market is making higher highs and higher lows, it may not make it as smooth as this, right? The market does not make it as smooth as this. This is just for learning purposes. When we go to the charts, you'll see that actually in this process, the market may make a lot of movements before making this high. And also it may make the same, a lot of movements before making a low, right? So you just have to know how to identify the highest turning points, or what people call swing highs, right? So the market is creating equal lows and equal highs, right? This level is almost at the same level as this first turning point here. You know, so the market came back here, it created what we call equal high, meaning that it's almost at the same level as this one here, right? This first high it created. Again, the market will repeat this same process until it does what we call a breakout, what we're going to be studying about today, right? This is the third type of market movement that you need to know. But also, if you're just new into trading, I usually advise you not to trade a ranging market. I advise you trade a trending market. Either the market is trending up or it's trending downwards. Ranging markets usually tend to be tricky for new people. It needs someone who has a bit experience into the market, right? Now, having known the types of markets, let's move on and look at the rules of breakout, right? We do have rules. Breakout is not just a matter of us having price crossing a certain level or having price breaking below or above support and resistance, right? So let's first look at these rules properly so that when we go to the charts, you understand exactly what we are looking out for, right? Now, the first thing that we talked about is, let's say this is your resistance, this is your support level, right? When price comes and does accumulation here and starts moving upwards, right? Accumulates again, moves upwards. When you want to know that this breakout is going to be sufficient or it's going to stand out, the first rule is the momentum approaching this level here, right? The momentum approaching this resistance should be strong. The market should be making bigger candles when approaching this level. That's the first thing you should be looking out for if you want to determine that this level could possibly be broken. Are we together? The momentum of this candle, of the candles approaching here, this level should be strong. The moment the candles approaching are very small and are getting smaller and smaller, it means that the market is losing energy of continuing in that direction. For example, if the market is going up and it makes big candle, smaller candle, even smaller candle, even smallest candle. To make matters worse, it even reaches there and is rejected. This is a bad sign. It means that actually buyers are losing energy of continuing up. Are we together? It means that these buyers are actually losing energy of continuing up, right? Now, when the first thing you're supposed to look out for is how the price approaches levels. It can be resistance or it can be support. For example, let's say the market has done a distribution up here and then it starts moving downwards. That's of course another accumulation here, then it continues down. Watch how the candles approach here. When there's going to be a breakout, the momentum around here should be strong. The candles approaching this level should be strong. Even if it reaches somewhere here and consolidates a bit, but the candle that almost came closer to it, as long as it is strong and the market starts consolidating near here, but without reaching the level, there are higher chances that the price is going to break below that support. Are we together? So that's our first rule, right? There should be a break or crossover with sufficient momentum when it is approaching that level. Either it can be resistance or it can be support. Are we together? That is the first rule. The first rule is there should be a break. But how do you know that there's going to be a break? If this is your resistance, for example, the momentum approaching this level should be strong, right? And then we need to see a crossover. The price should cross over this level. Remember, we said the act of crossing over is what we call a break. That's what our first rule is saying. But how do you know that the first rule has sufficiently happened or it is really a proper breakout? Is the momentum with which the price approaches that level. It can be support or it can be resistance. Are we together? That is our first rule. Now, the second rule, we say that once there's a breakout, we need to see the market makers coming back to collect liquidity. Now, when the market makers come back to collect liquidity, this act is what we call a retest. Now, we are saying that this retest, even if it is happening, it should come back when it is weak. Are we together? For example, if the market has crossed over, we have our break. Now we're talking about the retest. This retest here should be weak, right? It should not be as strong as the break. Now, this is where the issue of false breakouts comes in, right? Most people tend not to understand how false breakouts come about. Now, this is the point you should pay attention to, right? The momentum of breaking, if it was strong, the momentum of the retest should be weak. What do I mean? If there were long candles while breaking out here, we need smaller candles to show that the approach to this broken level here, the momentum should be weak so that the sellers do not gain energy to break back below. The moment you see, it's like this. The moment you see the breakout momentum was strong and the retest momentum is strong, avoid such market situations because there are higher chances the market is going to break up. If it's coming back to retest with the same momentum, there are higher chances it's going to break back down. And what happens? It means that it has made a false breakout. It has trapped a lot of buyers here, and then it will retest this level here and then continues down. Are we together? Let me just repeat that. Let's just repeat the second point. If this is, for example, my support level, I need the market to break, right? After the break, the first rule that we spoke about with strong momentum or sufficient momentum, we need this retest to be with weak candles approaching it. What does it indicate? It indicates that buyers do not have the strength to continue pushing the market up. And in this situation is whereby you'll see patterns. In this situation is whereby you'll see continuation patterns down, right? So the market should retest with a very, very weak momentum upwards. This signifies that these people are going up do not have enough energy to keep pushing the price up. I hope I do make sense, right? Now, that is the second rule to avoid false breakouts. The moment there is the same energy coming back up, let me just draw it here. If this is the break with strong energy or strong momentum, turns from here and then it has the same energy coming here, there are higher chances it's going to break back inside, right? And then it will retest this level and then push up, right? So make sure you're watching the momentum. We have a full video about momentum. Make sure you look for it and watch it if you don't understand what momentum is. But in simple or a layman's language, momentum is the candle getting weaker and weaker, or the candles getting weaker and weaker when approaching a certain level, right? Or there should be accumulation just below that level. Oh, sorry, after touching the level, the market should be doing what we call accumulation at support or distribution at resistance, right? So now let's go to the last rule that we're supposed to observe before we can confirm that actually there has been a break and retest, a proper one. Now, let's start to the resistance side. If this is my resistance, the market, of course, is coming with strong momentum, breaks above, right? The candles approach with strong momentum and then break. Now, and then we have our weak retest with weak momentum. We reach here. Now, what most traders do is, as soon as they observe that, they start taking buys. This is wrong, right? You need to observe what we call change of trend, and your confirmations should first happen around this area here, right? I'll just give an example of pattern traders. We're not talking about change of trend today and confirmations. We shall talk about that in another video. So make sure you put on your notification bells. And if you have not subscribed, make sure you click that subscription button, right? Now, for example, let me use just pattern traders. If the market is coming to retest here in a weak trend and creates for you a trend line here, I cannot want to buy before the market breaks this trend. What do I mean? I mean that you'll actually be buying at resistance. Why is this trend line a resistance? This trend line is a resistance because the market can easily touch this resistance and then it breaks back down, right? So for you to buy this, the market should first cross over before you can buy, so that you're buying at a support level, or you can wait for a shape to be created Some people call it double bottoms. You can have a head and inverse head and shoulders before taking this trade. That's what we call change of trend or confirmation. Now, the same case applies to support. For example, if this is my support level and the market is approaching with strong momentum, it breaks. Rule 1, fulfilled. And then the market retests using a weak momentum, right? Let's say I'm a pattern trader and I cannot take this sell. Most of you like sniper entries, and that's why most of you are losing your money, right? You want sniper entries and you do not understand the rules of sniper entries, right? Now, the market comes to this level here. Before breaking out, people are selling, and this is wrong. You cannot just sell before a change of trend. You'll want to wait the market to create for you a structure, or if you're a patterns trader, you'll want the market to create for you, to show you a break and possibly maybe a retest. Then you can take your trade. There is no need to panic as a trader. That's where the saying of patience comes from. Most of us do not know where the saying of patience comes from, right? So these are the 3 rules that must be fulfilled before you know that, or before you say that there has been a breakout, a proper breakout. There must be a break itself. There must be a weak retest. The break, of course, should be with a strong momentum. I've told you what momentum is. Momentum is not just breaking with many candles. It can break with many candles, but when the candles are very weak, then you have a false breakout, right? The momentum should be very strong and the retest should have a very weak momentum, right? So that's the second rule. And the third rule, we are saying that we need to have a change of trend. I've given you a few examples, plus confirmations. Are we together? So now, those are the rules. In case I'm very fast for you, make sure you slow down the video, or you can just rewatch it so that I do not leave you behind, right? Now, let's go to how do we trade the break and retest, right? How do we trade the break and retest? One, we looked at the types of market movement, right? So when you're trading, someone was wondering when we started, why are we studying the market movement? You have to first identify what type of market movement am I in? Am I in an uptrend or am I in a downtrend? Remember we said downtrend, we're making lower lows and lower highs. In an uptrend, we're making higher highs and higher lows. This is the higher low. This is the higher high, higher high, higher low, higher high, higher low. Downtrend, we're making lower low, lower high, lower low, lower high, like that. So you need to first identify, am I in a downtrend? Am I in an uptrend? So in a downtrend, you know that I'm going to be breaking lower lows, right? What do I mean by that? In a downtrend, the market is making lows and lower highs. I know that I'm expecting to break here, so I'll have a retest of this level. So I'll know that I would like to take my trade data from here, or people who trade retest, I would like to take my small short buy from here to here, which I do not advise. I advise you trade in the direction of the trend, right? So you will know, it helps you to identify where you're going to take your trade from. And first and foremost, it helps you see if all the rules are being fulfilled. The same applies to an uptrend. If the market is making a high, higher low, breaks this level, then you can observe a weak retest, right? Change of trend and confirmation, then you can take your trade. So first and foremost, identify the type of movement the market is making so that you know how to position yourself. Most traders do not know where they're in the market. They don't know what they're supposed to be doing. So make sure you know the type of market movement that the price is making, right? That's the first and foremost thing, right? Then secondly, after identifying that the market is an uptrend, let's say, for example, I've just broken this previous higher high here. I will mark this higher high and it will be my area of interest, depending on the time frame I am in. If it is in a bigger time frame, remember we talked about time frames intensively. If you don't know the different uses of time frames, or you do not know how to use time frames, make sure you watch that video, right? One, you need to have an analysis time frame where you get from your area of interest. Then 2, you need to have the entry time frame. And then 3, you need to have the refining time frame. You need to have these 3. It doesn't matter. Some people will say that monthly, weekly, and daily are not good for me to do analysis from there. It doesn't matter. You can start from H4, H1, like that. But of course, that's not the proper way. There are higher chances you will not be consistent, right? There are very higher chances. You need to know what is happening in a bigger time frame, because the market makers move in a big time frame. They know that us, the non-reportable traders, the retailer traders, we do not have enough liquidity to move like them. So they like using higher time frames, and they know, of course, As the retailers, we do not use those time frames, right? So make sure at least your analysis time frame, one of them is a bigger time frame. For example, if I'm using weekly, I'll come and the market has broken this higher high, let's say. So I'll know that I have my area of value here or area of interest. I'll mark this area. That's what the second point is saying. After identifying the type of market you're in, the type of market movement, mark your area of interest. Now, for example, this is my area of interest. Now, what do I want to see? I want to see the rules happening, right? Apply the rules. That's the third one. If the momentum was strong here, that is one. Remember the rules that we just spoke about. If you've forgotten them and you're not taking notes, you can just rewind a bit and look at the rules. We need a strong momentum, right? After that strong momentum, what do we want to see? We want to see the market giving us a weak return to this level here, right? Now, when the market gives us a weak return to this level here is when we shall rush to our entry time frame to look for a change of trend here and our confirmations, because we do not look for change of trend and confirmations in a bigger time frame. We look for it in our entry time frame. So this is our analysis that we have done, number one. Then two, you go to your entry time frame to look for change of trend and entries, right? Don't worry, we're doing theory. We're going to go to the charts just shortly. Make sure you stick around and see how all this plays out, right? Now, when the market reaches here is when I'll go to my entry time frame and take my trade. This is an explanation. The same thing happens in a downtrend. Someone will say, what about downtrend? The same applies to downtrend. Let's assume the market makes a low, makes a high, and then breaks this level here. Now, when I notice that I'm in a downtrend, remember we've said the first rule is identify the type of market movement, mark your area of interest, then apply the rules that we have spoken about, right? Now, when the market breaks here, this is my area of interest, here. What do I want to see? The momentum has happened, the break has happened. The second thing I want to see is a weak return to this area here. When I say a weak return to this area, I will go to my entry time frames, look for a change of trend and confirmations here before I can take my trade. Because we know in a downtrend, the market is making lower lows and lower highs. Are we together? That is the type of market movement. Even those who are trading shapes, if this is my double bottom, the market has broken this. In simple terms, it has made a high, a low, higher high. This is my area of value. We have spoken about W's and M's comprehensively in one of our videos. Make sure you look for it in case you do not know their rules. The market is here. So I want a weak return to this area here. When the market returns weekly to this area, I go to my entry time frame and then I take my trades, right? The same applies to M's. Let's say this is my M, right? The market has broken this area. So this is my area of interest. Some people trade these reversals. You can trade this reversal here. It's okay. But I will mark this is my area of interest. I have this breakout. Remember, I was talking about breakout. First, the rule has happened. The market made a low, lower high, a low. So I want to see a weak return to this level. Go to my entry time frame, look for a change of trend. Never, ever take a trade without change of trend, right? And then I can take my trade for a lower low because now the market is making lower low, lower high, lower low, lower highs, right? Now, these are the rules of break and retests. And we have spoken about the theory. I hope you've understood. If you've not understood, do not forget to leave your questions below in the comment section. That's one. Then two, you can also rewind the video, right? So that you watch it again and again until you understand. Now, having looked at the theory part, let's now go to our charts and we see different examples practically on the chart, right? Okay, so I am now on my chart. Let's use an example of GBP USD. I'm just using my replay tool. So I've identified a level of breakout that happened. I just want you to look at, you can see that when the market approached this area here, I just want you to first look at the way the market approached it, right? Look at this is a big candle, smaller candle, smaller candle. So the market was rejected here. This could not give us a breakout, right? But then look at what happened next. Big candle, bigger candle, and then the market broke out, right? So this is what I was explaining to you in the theory part. Observe how the market approaches a turning point. You can see this turning point push the market down. But now when the market was coming back to it, big candle, it was losing momentum, small candle, even smaller candle. So this could not push the market through, right? But what happened next is what pushed the market through, when the market gained the momentum to break it, right? Always observe the momentum of the candles, right? So this here showed loss of momentum, this movement here, while this one here showed engaging momentum, like it was increasing momentum. That's why we broke this level here. Are we together? So now let's see if the market will come and give us a retest of this area here that the market has just broken. Now we want it to give us, the first rule has happened. What's the first rule? We wanted the market to break, to cross over, or to break, to have a break with strong momentum. Now this is rule number 1 being fulfilled. What do we want next? We want the market to give us a weak retest. Now let's see if the market will give us that weak retest, right? So let's see the market is losing momentum. Let's see if the market actually gives us that weak retest that we're looking for. Okay. Here, the market gives us the retest. Now, how are you going to know that this is a weak retest, right? Look at these candles. This is 1 candle. This is 2 candles. This is 3. 3 from this distance to here. This distance has only 3 candles. But look at the candles that are coming to retest here. 1, 2, 3, 4, 5 candles. It means that this is a very weak movement back to this area that the market had crossed. So this is fulfilling rule number 2. We need a weak retest when the price is coming back to the broken level. After that, what do I want? I can go to my entry time frame. For example, since I'm in weekly, I can go to H4, and then I look for my entry rules, right? So let's come to H4, right? In H4, I already have a loss of momentum and double bottoms, right? So what will I want? I just want the market to come back and retest this area here, right? And then I can take my trade upwards, right? If the market gives me a retest to this level, and then I can take my trade. If they give me a retest to this level here, because it's a previous lower low, what will I be wanting? I want the market to give me, if it continues and breaks above here, I want the market to give me a retest on this level before I can take my trade long, right? So let's try to see what the market does, right? So the market is being played there, playing there. Didn't give me a retest to my level. Didn't give me a retest, yes. It comes and gives me a retest. So I'm going to take my long position just when the market comes to this area here. So we're going to take our 1 to 3, just 1 to 3, right? We just need a 1 to 3, something like that, right? So let's see how the market plays out. Let's see how the market plays out. We had a small drawdown, so let's see how the market plays out. Let's see how the market plays out. Let's see how the market plays out. Almost took us out. Let's see how the market plays out. Let's see how the market plays out. So we go into profit, right? This one a bit too long, but it's okay as long as you're following your rules. As long as you're following your rules. So let's see how it ended up. Did we win it or did we lose it? Let's see if we won it or lost it. Of course, it was a weekly setup, so it's a swing trade, right? So let's see. Okay. Wow, it's consolidating in one place. So let's see. Okay, we're almost there. So finally, we do win our trade, right? This is a weekly setup. So usually weekly setups are swing trades, right? Now, you can clearly see our stop loss was not taken out. We almost lost it, but we have to follow the rules. And finally, the market went into our direction, right? So this is how you do trade breakouts and retests, right? And how you do take trades when you want to use breakout and retests. Make sure you follow the rules, and then follow the rules and then take the trade and follow your entry rules, right? Do not keep extending your stop losses. Do not keep looking for trading with hope and all those other things, maybe adding more trades along the way when the trade is going against you and all that, right? So this is our example one. Let's look for another example. Let's look for another example. Let's use the current market, right? Let's use the current market. So let's go to weekly and get another setup. Let's go to weekly and get another setup, right? So I'll just use the current market so that maybe it can make sense to you. Now, let me just bring my replay tool here and we observe a breakout here. Now, we did have the market taking out this level here and then also taking out, we have this turning point here, right? We have this turning point and then also we have this turning point here, right? Now, as a trader, we've said when you're trading using breakouts, just mark your levels and wait, right? As soon as the market offers you the breakout, you want to see a weak retest to the level, right? Now, let's play and see how the market behaved. Now, this breakout was not proper, so we're not going to consider it. Let's see. We want to see a proper breakout, right? Want to see a proper breakout. Now, this is a proper breakout here. The market broke this one and retested, but it wasn't a proper one, right? So someone would have gambled with it, but I don't advise you trade a breakout that is almost consolidating. This shows that the market consolidated here a bit. Now let's see, this is a clean breakout for us. Let's see the momentum of the candle, actually how the market closed the week. So you can see that this was a strong breakout. Why is it a strong breakout? Because the market had a smaller candle and then the candle that was crossing increased the momentum. Now, what do we want to see? We want to see the market giving us a weak comeback to this area here, right? So let's see if the market will give us a weak comeback to that area, right? So let's see if the market gives us a weak comeback. This candle was a bit strong. Now let's see the next candle. Is it going to reject or not? The moment it rejects and then take out the high of this candle, it shows that it was a very weak momentum, right? So let's see how it does that, right? Let's see how it does. And let's see. You can clearly see that the market rejected that week, right? So let's just remove this candle. So you can clearly see that this week ended as a rejecting candle, meaning that 2 weeks not taking out the previous week candle, meaning that this is a weak momentum. What do you do again? Go to your entry time frame. You can use H1, you can use H4, you can use H3, H2, minute time frames. It's up to you, right? So let's go to my entry time frame. Now, what do I want to see? I want to see, let's now use, those people use trend lines. Now, I want to see the market coming out of this trend line, right? I want to see the market breaking this trend line before I can take my trade, right? So let's see if the market breaks. The market breaks this trend line just here. Now, I want to take a short trade after the breakout. So I'll have my entry just here and my stop loss above this structure. And I want a 1, 2, 3, right? Since it is a swing structure. So I want a 1, 2, 3, right? Let's just put it to 1, 2, 3 around there. So let's see if actually we win also this trade. Let's see if we win this trade. The market gave us a nice retest, right? The market gave us a nice retest. Let's see if we win the trade, right? Let's see if we win the trade. So let's see. This level actually is holding for us the price properly. This level here is what I'm talking about. It's holding the price for us properly, meaning that our entry is safe. So let's try to see if we win that trade. Again, the level holds the price, which is nice. So let's see if we win the trade, right? The level again holds price, right? Meaning still our entry is very safe. So let's see if we actually win that trade. This is a weekly setup, meaning it's a swing trade. So not every trader is a swinger. I'm just using an example. And then we won the trade at this point, right? So this is how we trade the break and retests, guys. Make sure you follow all the rules. The moment you do not follow all the rules, it's going to be very, very bad for you, right? Make sure all the rules are fulfilled. Where the important aspect is the aspect of momentum, right? Make sure you observe the momentum at the levels, right? Once the momentum that is of the retest is very weak, that's a plus for you. But the moment the retest momentum is very, very strong, I would advise you avoid those trades. So if you're a new trader and it's your first time coming across our channel, please do not forget to hit the subscribe button and turn on the notification bell. And if you've been watching our videos and found this video of value to